Hello and welcome to this week's webinar on risk management with cryptocurrency. My name is Rume Dominic. As we wait for more people to join, um, let's see. Let's add one of our presentation. We are going to add. So let's present some of our slides. Let's share screen. I mean, when you can see my screen, confirm you can see my screen. Okay, I think this is where we're going to. All right. Uh, yes. So we're here now. Let's add that to the screen. Okay. I think you can see both. All right. So, guys, welcome to today's episode of our ongoing webinar series that started a few weeks back. One that we are looking at how we can effectively manage our risk, especially with cryptocurrency trading. Now, because risk management is something that is very critical for every investor. If an investor does not manage his risk very well, that investor is a gambler. And for you not to be a gambler, there is need for you to be able to have high level of risk management when you are trading your cryptocurrency. So artificial intelligence is a powerful tool that can be used to improve cryptocurrency and secure gap between artificial intelligence and humans for powerful results. I shared how to be used, especially with financial tools, to be able to identify patterns or irregular patterns, especially when you are trading, and then also see that maybe liquidity is getting low. In so when you are trading on DeFi platforms, you need liquidity to be able to swap from one cryptocurrency to another, and because you need liquidity to be able to come from one to convert from one cryptocurrency to another, basically there must always be liquidity in that particular smart contract. Now, what if the smart contract has been exploited? Artificial intelligence can quickly tell you that the smart contract has been exploited, that you should not even try the first swap, which is buying the cryptocurrency, because you will not be able to sell it. So blockchain analytics actually helps in order to be able to reduce what your risk. Now we see from here that blockchain analytics platform use artificial intelligence to analyze blockchain data and identify suspicious transaction and also track the movement of cryptocurrency funds. Now, so cryptocurrency, let's talk of cryptocurrency in terms of a business to business type of relationship. Now, in terms of business to business type of relationship, some people can deposit fraudulent money or fraudulent digital assets into a particular um, exchange. Now, if that particular digital asset has been flagged in a in another exchange before it was sent to this new exchange, there is a high possibility that the artificial intelligence tool can quickly detect that particular digital signature that flagged it and then quickly mark that particular cryptocurrency as a red flag type of cryptocurrency that just entered into the platform and then quickly say it's what fraudulent. Now let's look at in terms of cryptocurrency wallets. How do I mean? Some cryptocurrency wallets use artificial intelligence to secure users' funds. For example, wallets use artificial intelligence to generate multi-signature addresses, which requires multiple keys to authorize. Now, John Q, John Cuban recently lost some of his cryptocurrency. I think about $870,000. Now, as he lost that particular money, um, it's a small part of his money because he has about $5 billion. That should be like 0.01% of his wealth. However, if that should have happened to both to me or you, we would not be we will not remain the same. So what happens is that with this risk type of risk management, artificial intelligence can be used to be able to say that okay, um as this money wants to leave this MetaMask wallet now because it's happened on a Web3 platform or a Web3 wallet, as this money wants to leave this platform now, let there be 4 or 5 digital signature to be able to authorize this particular transaction before the transaction what goes out. And that will see that If all five transactions or five digital signature does not come, that money will not be what will not be able to go out of that wallet, and then it will reduce the risk of the hack that would have happened in that wallet. However, that type of important is that artificial intelligence is not a silver bullet. So artificial intelligence system can be fooled and it can be hacked. It's important for you to implement other security measures such as strong password and two-factor authentication to protect your cryptocurrency. So two-factor authentication and having a strong password in this space is one way that you can use to to protect your your cryptocurrency. Now, if you can do that, um, you will see that if someone is trying to hack your wallet, or maybe if somebody uses an artificial intelligence password breaker, maybe like a brute force attack on your wallet, it will not it will not happen. You will not be able to, they will not be able to hack into your into your wallet. So let's really go to identifying and measuring risk. Cryptocurrency is a volatile asset, and there are a number of risks associated with investing and using cryptocurrency. Some of the risks to be aware of include: number one, market risk. How do we mean by market risk? Now, the cryptocurrency market is volatile and unpredictable, and the prices can fluctuate widely. This means that there's a risk of losing money on your investment if the price of the cryptocurrency that you are investing in falls. And technological risk. Cryptocurrency is a new and relatively new technology, and there is still some technical risk associated with it. Wow. So you identify the fact that there's market risk, there's technological risk, and there's also regulatory risk. Now, this is coming from the government in the sense that they must put in laws to be able to protect users' fund, people that use cryptocurrencies. So these are ways that you must quickly identify to be able to these are ways that you must quickly identify to be able to mitigate against risk in the market. However, let's quickly jump to volatility and market risks. Now, understand that with cryptocurrency, there is something called volatility, and volatility is a measure of the magnitude of fluctuations in the market, right? So, the magnitude of fluctuations in the market at a point in time, especially in the price of an asset, is referred to as volatility, meaning that with every digital asset, you can see even with dollar, the dollar as a currency rises up and falls. Every currency must rise and fall, and cryptocurrency, which is one of the sound money in the world, is not short of that particular word property. Money has property of divisibility, has property of fluctuation, and also has property of something that can be exchanged as value, and cryptocurrency satisfies these different reasons. Now, market risk, when it falls, when you merge your market risk with volatility, you can see that this is the risk that the price of an asset will decline due to the overall market condition. However, there are sometimes when the price of the asset will go up and then it will be to your favor and yeah, you'll be happy. But what if it goes down? That becomes a high level of market risk. Let's look at artificial intelligence role in risk management. So artificial intelligence role can be used to improve cryptocurrency risk management in a number of ways. For example, it can be used to identify and assess risk. AI can be used to analyze large amount of data, right? And assess the risk that is associated with the cryptocurrency investment. This data can include historical market data and social media data. Now, I think there's one artificial intelligence tool that I think I used once, and I said it should say it as, I think, circle of competence. Let me see, CIRCLE, circle of competence. Now, you can use artificial intelligence to be able to. I want to use this command prompt, right, to identify some risk in investing. So if I have this command prompt, so just copy this tried and tested command prompt. Once you copy this tried and tested command prompt, come to your chat GPT here. Once you come to your chat GPT here, all you need to do is so hide this. So control V. So let's see. I'm thinking of investing in, so because let's use bit Ethereum, Ethereum, because Ethereum is cryptocurrency. So let's say using the circle of competence mental model help me analyze my level of expertise and identify any knowledge gap. So an investor, when the investor does not have the knowledge, he's at a disadvantage point. So artificial intelligence can help you do that. So straying outside of my circle can lead to poor decisions. So I want to avoid making mistake. You should ask me a set of questions about this potential investment, so that at the end of the quiz, right, it can give you a score from 0 to 10 to indicate whether you are outside your circle of competence. So when you know your circle of competence, especially when you want to get into an investment, you will be able to do well in that investment. In fact, it is said that if you want to do any business or go into any investment, ensure you have read about 5 or 6 books around that particular investment niche before you dive into that investment. So as you can see, that artificial intelligence just gave us a feedback, and the feedback that it gave us is, of course, assessing your circle of competence is a smart approach to investment. So let's delve into some questions about Ethereum to determine your level of expertise and any potential knowledge gap. You see? So it gave me some questions about Ethereum. So which is your favorite question from this 1 to 10? I guess mine is describe Ethereum 2.0 and its potential impact on the network scalability, security, and energy efficiency. The reason why that is one of my favorite questions, especially around this circle of competence, is this: scalability, security. We are talking about risk management, and security becomes what? Important. Security becomes what? Important. How about the scalability? The ability for a blockchain to be able to take high level of transactions and process those transactions at cheaper fees very fast, so that there is no delay or lag time for the receiver to get his or her money, and the ability for cross-chain operation. How do I mean? Interoperability is one of the properties of the blockchain, to be able to see that the blockchain now can move from maybe from the Ethereum blockchain to Arbitrum blockchain to Optimism blockchain to BNB blockchain to maybe Luna blockchain. There is need for network scalability, and Ethereum 2.0. Ethereum used to run on the proof of work type of system until it moved finally about 1 year ago to the proof of stake what type of system. And currently it is so what it is so scalable. So so you can see, I just did this and I was able to describe what Ethereum 2.0 is, its potential. So it then means in my own circle of competence, I'm qualified. I'm much more than qualified to get into this type of what investment, because you can see that for every one of the questions that it gave to me, I can quickly answer it. So which one of them? You say, what is gas in the context of Ethereum transaction, and how does it affect the network's functionality and users experience? So in Ethereum 1.0, the gas fees used to be extremely high. What is gas? Gas is on the Bitcoin blockchain, it is called transaction fees. The fee you pay to be able to send transaction is called transaction fee. On the Ethereum blockchain, it's not called transaction fee. It is called what? Gas. So how does it affect the network functionality? If the gas fee is so high, you will not be able to send transactions, because you will not like to use maybe $50 to send a $20 transaction. And there has been times on the blockchain when this happened, and that was a need why we had to now move from Ethereum 1.0 to layer 2 blockchains, and now developed Ethereum 2.0. So it is very interesting that the way artificial intelligence can be used for high level of risk management. You want to be able to identify and then assess this risk. You want to develop risk mitigation strategies. Like, artificial intelligence can be used to develop this type of strategies, and these strategies include diversifying your portfolios, using stop loss orders, and hedging against price fluctuations. Now, stop loss orders, what do we mean by stop loss orders? When you enter into a market and you are trading, and that particular trade that you are making is going south, is not making money, what do? Maybe you are losing. You set a particular order that, okay, if it goes below my entry point, 8% below my entry point, that's your money, your capital pulls back 8% below your entry point, then you say it should sell off that particular trade so that you don't lose money, money further. So you would have been able to hedge against the price fluctuation by protecting your capital and maybe leaving it in stable currency. Artificial intelligence also is used to prevent fraud and theft because it is able to identify suspicious transactions using natural language processing to detect a lot of phishing attacks. Overall, artificial intelligence is not a silver bullet, and we must know that risk assessment is an important part of any investment strategy. And by understanding the risk associated with cryptocurrency, investors can make much more informed decisions about their investment. Any investor that does not take risk management into consideration is a gambler and is ready to go to Rec City. It won't take much more time. It won't take time for arraigned on the news for maybe fraud or scam. Like you can see what happened to the FXT guy. Basically, what happened? We had tokens that were not backed with any currency, or that were not backed with real tangible assets. So whenever the price of Bitcoin fluctuates, those tokens they are bound to fluctuate because the price of the king has also gone down. So artificial intelligence is a valuable tool that we can use for cryptocurrency risk management, but it's important to use it in conjunction with other security measures, like what we said, two-factor authentication, and having a very high level of strong password. Having a very, very high level of strong password. If you have questions, you can type them on the comment section. So I take the questions, so I can take these questions and be able to get back to you on it. Can answer some of them now live. Once I can answer now, I will be answering some of them on my Twitter. Maybe put some in a tweet thread. So let's look at this artificial intelligence for security in cryptocurrency. So let's look at cybersecurity threats in cryptocurrency. Now, cybersecurity is a digital or sorry, cybersecurity threats in cryptocurrency. Knowing that cryptocurrency is a digital or virtual currency that is secured using cryptography, which makes it nearly impossible to counterfeit, right? Um, or double spend. It is very important that there are a high level of cybersecurity threats associated with cryptocurrency. How do I mean? Number one, phishing attacks. Phishing attacks. In fact, because we are dealing with digital currency, cyber attack is inevitable. In fact, right now, the military of every country at the moment is even going further than training their physical military army men. They are going into training professionals for cyber defense because we've seen recently that they've brought down some like recently they brought down a power station in Africa. They brought down one in US. They brought down one recently, and they were asking for ransom for them to pay them ransom in cryptocurrency. A friend of mine, about 4 months back, she lost about, I think, 17,000 plus dollars from her cryptocurrency wallet. What happened? She was using that wallet to interact with a protocol online that promised her some airdrop, and that was how she lost it. So that happened from a malware attack. How about hacking attack? Some of you will just go to your wallet, you will not see any money again in your wallet. That means your wallet has been hacked. It's very important to know that risk management in cryptocurrency is not something you can overlook at all. If not, if you try to do it, you would end up having high level of regrets. Overlook risk management, you would regret it. So that's why it is good to use artificial intelligence driven solutions. You can use artificial intelligence driven security solutions to be able to have much more risk management. Much more risk management. Educating users about risk management, just like we're doing now, and showing you the tools and ways that you can even input some of these prompts into artificial into your AI bots to be able to tell you your circle of competence, what you need to invest in, is very important, because when you educate people, then they will be able to what do it. Then they will be able to actually scale that particular thing, amplify whatever you've educated them on. It is also good that to look at safeguarding wallets and what transactions. So there are a number of things that cryptocurrencies that can do to safeguard their wallet and transaction, from storing their cryptocurrency securely. So they should use a very good wallet, reliable wallet that's recommended to. So they should be cautious. They should be cautious of phishing attacks amongst using strong password and others. And those are things that they can do to be able to what to safeguard their wallet and most of their transactions. So artificial intelligence is a powerful tool that can be used to improve cryptocurrency security and also be able to mitigate against risk in what in cryptocurrency. It is good that we educate ourselves to always get better at it. So until next time, my very good friends, I believe that you've been able to arm yourself very well for a future where you are able to have high level of risk management, especially when you are trading with cryptocurrency. You understand the concept of the risk management, also know what the role that artificial intelligence plays in cryptocurrency, what risk management. Give Ensure you like this video, ensure you subscribe to this channel for much more um webinars like this. Ensure you also share this link and this video with someone else. And until next time, my very good friends, see you.